Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond. It is Friday, September the 14th, 2018. At current, it is 4:52 in the a.m. Eastern Standard Time. On our agenda today is, first off, happy Friday. We're looking forward to the weekend. We're going to be doing best stock charts tomorrow. If you're not currently on our email list and you want that video of the stocks that we're watching as we proceed into the next trading week, enter your email address. We hate spam too. First up this morning, we're going to go over a few member stock chart requests, plus a few stocks that are on our watch list that we're looking to trade to the long side. And then we're going to segue over into the pre-market activity. So let's kick off with why only one video this week. My main tower, my powerhouse computer is in for service. And I'm using a laptop, which is good, but when you run editing software, audio, all the programs that you need to run and create content, you need power, and unfortunately that tower is in the shop. Hopefully getting it back today. Either way, I will be putting out content over the weekend. So let's get to the stocks that we're watching. Let's kick things off with GRUB daily chart. We've been big fans of GRUB. We were long, we booked profits. Now we're looking to get long yet again. This is a daily chart. Yesterday we flashed a bullish key reversal on the day. Volume a bit light. We're looking for a breakout here above the 147.72 level. I will warn RSI putting in lower highs, and we have a possible head and shoulders set up on RSI. I know some of you are laughing at that. How can you have an RSI with head and shoulders set up? You can. You can have it on Stokes. You can have it on MACD. On the lines anyway, not the histogram. So left shoulder, head, right shoulder. Watch the neckline here. This may be a false flag, reversal bar. If we break down below yesterday's lows, look out below. Stokes rising, looking good. So as long as the markets maintain the upward move, I think that GRUB will continue to outperform the markets. The rising 20-period moving average in red here is looking good, and it is acting as a consolidation point. So GRUB, we're looking to get long of, bullish. Lululemon, we've been bullish on Lululemon for quite some time. Ever since this bull flag breakout, we've been consolidating gains ever since we gapped up higher. Yesterday, a bullish key reversal on the day. A little bit of weakness here on Stochx RSI. Some of the indicators here are looking a little bit weak. However, I think you could attribute the weakness to the consolidation. I think that the path of least resistance here on Lululemon remains to the upside. I like it as a long and a breakout. Members will talk more about Lululemon. In fact, members, what we're going to do is we're going to segue into a morning update immediately following Swing Trading Today. So stay tuned. We're going to segue right into it. Next chart up, AAP. I've spoken about this one many times on best stock charts. We're consolidating nicely. I think we're breaking out here very, very soon. Stokes leveling off. I predict that they are going to hook up. RSI a bit weak. I warned about this choppy action on Stochx RSI several days ago. This could soon be resolved. I think it's due to the consolidation here that we're getting this choppy action. Ultimate oscillator broke down. So what we're looking for here is a breakout on advanced auto parts. It remains one of our favorite names to the long side. Members, more to come here. Amedisys, AMED. This is a stock that is now in a bit of trouble. We were in a tight consolidation. It looked as if it could quite possibly break out. However, the problem here for the shares is that we put in a high at 126.30, pulled back, and we broke down to a new lower low, which is okay, but we rallied back. And the problem here is that we put in a lower high. Granted, only by 3 cents, but it matters, right? We could not take out the prior high, and we flashed a bearish key reversal. And now we are breaking down, or we have broken down, I should say, below the lower band of support. If we take out 116.25 and we close down below that level, look out below. These shares are going lower. Now, we could quite possibly double bottom out at that level, or if we put in a higher low, perhaps it's a buy. I wouldn't buy these shares until such time as we break out above this upper band of resistance here, or we form a new base, either at 116.25 or at a lower level. It could be at a prior resistance level, like back here on August the 6th at 111.97, or at support at 107.26. We're not quite sure yet. What I am sure of is that this is a stock that has been very strong. It is beginning to show chinks in the armor, and that you want to approach it with great caution. So I'm not saying to short it. I'm just saying don't buy it yet. Allow it to prove itself. It closed down yesterday below its 20-period moving average, which has been acting as support. It will now act as resistance. I would be careful here. The next chart up, SBRA Healthcare. This is a REIT. RSI is rising. However, we have been putting in lower highs, but price has been consolidating. You see that often. So we don't want to ignore the price action here and the fact that it may, in fact, influence the indicators. So we've been in a nice tight consolidation. We're looking for a breakout here above this upper band of resistance. And I think it will be a buy on that breakout. I wouldn't buy it now because we bounced right off of resistance yesterday. I'd want to see a move above it and a close above it, more importantly. Then I would look to add on a rally and a close above 23.83. That would mean a new high. Watch the volume. It's been dropping off some. So SBRA looking good to the long side. Taking a look at a quarterly chart. I just want to see where there's historic resistance. If we break out and above 23.83, where's our next resistance level? Right up here at 25.49. So I would mark that on your whiteboard or on your reminders. Set an alert, because you may want to book some profits into that resistance level if you get long. HIIQ, Healthcare Insurance Innovations, Inc. So we're coming under some pressure here. Our indicators are putting in lower highs. And with respect to RSI, lower lows now. So some relative weakness versus the RSI. Now price, we're not getting that yet. What we're doing is we're trading within a consolidation range. We are retesting support. We did not have a glamorous close yesterday, a bearish reversal day, but we did not break down below support. How is our volume? Very light. Would I buy the shares here? Sure. As long as you're going to use a stop right below this prior low at $50 per share. And I would keep my opening position small, and I would look to add on a breakout and a close above 56.85, or even better, 57.03. That would be my play on HIIQ. Ecopetrol. We've been talking about this for a while now. We've been very bullish on it. We've had a breakout on the shares after putting in this beautiful bull flag setup. We broke out on a weekly basis here the week of August the 20th. We then consolidated. This week, we're up 11.5%. Would I go buying these shares right now? The weekly chart, we're a bit extended here, but I think we still have a little bit more room to run. Let's take a look at a daily chart. Daily chart, we saw some profit taking yesterday. I would wait for a consolidation here, ideally a triangle formation or a bull flag setup, and I would buy the continuation breakout on EC. Great volume this week. This is what you want to see, institutional demand after putting in a nice sound base. So EC longer term, I think is moving higher. Do I think you can get it at a better price than where it closed yesterday? In all probability, yes, you can. So allow for the pullback. Watch for the breakout. Members, we'll talk more about EC. Herbalife weekly chart. We broke out several weeks ago and we discussed this. We got the breakout the week of July the 30th. Rallied. We've then pulled back. And we traced all the way back down to the breakout point. Now, some of you may be saying, you know, wow, weak stock, horrible breakout. No, this is beautiful. This is exactly what you want to see. A retest of what was prior resistance is now acting as support. This week we have a bullish reversal bar, which is good stuff. Now, is all well with the chart here? Not really. If you take a look at Stokes, we're seeing some weakness here. We're putting in lower lows now after putting in a higher high versus this period here back in June. So that's a bit of a concern. If we move higher this week, could it be negated? Sure, it could be negated, but we'd have to have a significant move higher to negate it. Now, if we get a breakout, let's update the chart. If we get a breakout above this upper band of resistance here, would I worry about these indicators? No. As long as the Stokes stay above the 50 level, I would not worry. Price and volume trumps everything. Now, volume this week, considering it's Friday, I know this is a weekly chart, but we have 4/5 of the week in the books now, one trading day left to go, and this is pretty horrible volume. So that's a concern. So members, more to come here. Herbalife looking good on a weekly basis. CVX, Chevron Corp. This is for our fellow member Norris. Now, Chevron, we were watching it back here. I was hoping for a breakout. It never came. I warned of this lower high on Stokes, and we rolled over, put in lower lows, and the rest is history. We broke down below support, and here we are today, down at a low of 113.39 last week, and I believe this week as well. It was our low, just off of that, 113.76. How do the shares look right now? They're looking all right. We retraced all the way back up to this resistance level. Would I buy the shares now? I guess you could, but I'd use a stop right below 113.39. I would keep my buys small. I would get more excited on a rally and a close above 117.50. Let's take a look at a daily chart. All right, so on a daily basis, the chart is obvious, right? We have lower highs, lower lows. Is this a dead cat bounce? We don't know. We had a good day yesterday, a bullish reversal bar, good week thus far. We are off the highs a bit. So what do? How do we reconcile this chart? It's simple. Take your crayon out. Here we go. We know this is weekly support. Now, we remain in the downtrend channel. Would I advocate buying the shares right now? Probably not. I would rather wait until we see a breakout above this upper band of resistance. Now, I will caution that you have the 50-period moving average, which is declining and threatening to take out the 200-period moving average, and there's a very good chance that that's going to happen. So this is a chart that is setting up for a technically significant breakdown. So would I roll the dice right now? No. Why? It's because I know that immediately following the negative crossover of the 50-day crossing below the 200-day moving average, there's usually a rally back. It's normally not sustainable because you have your moving averages breaking down, and that's for a reason. Something's going on at a higher level view, causing the charts and the moving averages on initially a daily chart, right? And then on a weekly chart to begin to break down. Something's going on. So if we're looking for a short-term swing trade here, I would wait for the negative crossover of the 50-day down below the 200-day moving average. Ideally, at that point in time, we've pulled back. We're retesting the 113.39 level. That'll set up a double bottom setup and the potential for a rally higher. Do we break out and move on to new all-time highs? I don't know. But this is not a technically healthy chart. Volume yesterday was very good. Let's take a quick look at oil. Oil has been consolidating. When did it peak out? On July the 3rd, bearish reversal bar, back to CVX. When did it peak out? In its most recent rally, it peaked out back on May the 21st. So while not exactly a direct correlation, there is some correlation here. So I couldn't point the finger at a weakness in oil causing weakness in CVX. I think this is more of a company-specific issue. So I would simply watch this trade right now to see if it comes to me, meaning, again, We get a pullback to support after we get the negative crossover of the 50 crossing below the 200-day moving average. Then I would trade it for a swing trade to the long side. Absent that, I'm not seeing a tremendous amount of opportunity here as a long-term investment. For that, we need to use the weekly chart. Now, the next chart up is the GDX. Now, these are the gold mining shares. Now, I caught a lot of heat by some members because we've been long of the gold miners for a while now, and the month of August was not a good month. Now, we did stop out of a third of our position. We're actually long of the NUGT. We did stop out of a third of our position, and that's when the heat started. Now, I've never said that we should be overly long of the gold miners. I have said that it is an investment for a longer-term play on a decline in the dollar due to deficits and inflation, and we're sticking by it. So if you're overly long of the GDX, NUGT, you're not supposed to be right now. This is not a time to be overly aggressive of shares of a sector that are in a downtrend. Now, if you're buying for value, I'm fine with that. Did I go buying back my third that I stopped out of this week? No, not at all, because I'm waiting for a bigger move in the gold mining shares. I want to make certain that the bottom is in, and I personally think that we are very close to a bottom here, and I think that there's a very good chance that we've already seen the bottom. Now I'm looking for the signal by the market to validate my opinion, and so far this week, we put in a new weekly low. What have we done? Reversal week. Now I'll talk about the pre-market activity of the US dollar and the price of gold in a moment, because I will point out that gold has not put in a new monthly low, whereas the gold mining names have. So GDX, would I go buying the gold miners right now? If I had no position whatsoever, sure. If you think there's value there, start building a position. Would I get overly aggressive? No, I would love to double my current position. I'm not ready yet, because what hasn't changed on this weekly chart? The trend. The trend is still down. Is this a dead cat bounce? I don't know. We need to see, rather than seeing lower lows and lower highs, we need to see higher lows and higher highs. That's the market saying, okay, Bob, start building your position back up again. So more to come here over the weekend. We'll talk about our position. In fact, I'll talk about it later on with members, our game plan for the gold mining name, because I think that we're in the very early stages of a recovery in gold and the gold miners, because you're seeing the dollar roll over. More to come. Canopy growth. This is most recently brought to my attention by fellow member Yancey. And I mentioned the other day, I was looking for a breakout of this triangle formation, but if we didn't get one, I would be really good with that, because a pullback would be welcome, because this is a sector that is in the early stages of moving a lot higher. So while I wouldn't go stepping in today and buying shares, because we are breaking down, we had a significantly down day yesterday, down 13.67%, some news out of Canada. So we may get a continuation pullback here, and I welcome it. And we'll be looking to open up a long position as an investment. I really like this sector. Big down volume for the past couple of days. Yeah, it looks as though we're going to go lower here, but I would not short it. I would not short this name. Members, more to come here. New Skin. We spoke about New Skin back here. We were looking for a breakout. We got the breakout. We've been consolidating. We broke out this week. A really good move on Wednesday. Yesterday, we got a pullback. That's fine. We were a little bit frothy. We may get a further pullback. I think that New Skin can be bought on a new breakout above whatever consolidation it sets up. Whether it be a pennant, triangle, bull flag setup, they're all continuation breakout setups. We'll be looking to buy the breakout. The chart looks good. New Skin, long. SOXS. This puts you short of the semis. We booked profits on the SOXS the day before last. Why? We rallied up and into the primary upper band of resistance, and we began to reverse off of it. We booked profits because we knew where there was resistance. Now we pulled back, and we're retesting what was the secondary resistance level. It is now acting as a line of support. So we'll probably see another day or so of consolidation here because volume was huge yesterday. And we'll look to reopen up our position going short of the semis. Now, another reason why, besides technically, I did not want to go staying long of the semis was the fact that the NASDAQ was poised for a breakout, and we got the breakout. So we're very glad that we identified the risk, meaning a breakout on the NASDAQ, which would help the semis, and the fact that we knew where there was resistance on the daily chart of SOXS. Now we can move back in, reopen up our short position of the semis at a better risk-reward level. Folks, let's segue now over into the pre-market activity. Let's talk about what's going on out there this morning. Okay, the dollar. We spoke about gold earlier. The dollar, which was weaker earlier. We have a new bar that's opened up, a 4-hour bar. It opened up at 5 a.m. It is now 5:24 in the a.m. So we have a ways to go here. I do think that we could press higher here after flashing a bottoming tail at support this last 4-hour bar. So what we're looking for is a rally up and through resistance. If it doesn't happen, if we take out this support level, I have an alert here at 94.065. If we break down below that level, there's a lot of technical damage that's been done to the dollar. I predict that next week it will proceed lower. Today is a critical day for the dollar because on a weekly basis, it is not a good week. It's quite bearish. And you can see that we have formed here a lower high and another series of lower highs, and now lower lows. And this morning, we have broken down to lows not seen since late July. Now, taking a look at gold, gold is up in the pre-market, $3.50. We're off the highs. Yesterday, we saw a reversal bar as we hit this third standard deviation Bollinger Band. It got ahead of itself. Now, members, we're going to talk about, again, when and where we plan on adding to our gold mining position. I do not believe that right now is the time. We do have a strategy in place to execute on a new long position on the gold miners and potentially a long on gold. Now is not the time. We are in the very early stages of putting in a bottom here on the gold miners and gold as well. Now note how we have lower highs getting put in on gold. We were in a consolidation. We broke out of that consolidation right here on the 11th, pulled back, did a retest, follow through breakout on the 12th. So gold is looking good here. Members, more to come. Bitcoin. Bitcoin is looking interesting. Now, it had consolidated, broke out, got ahead of itself, and I was even speaking back here on the 5th of September when it began just to fall apart. And what a huge breakdown it had. Now we've been consolidating. We saw a reversal bar here on, actually this morning, and we tapped the lower band of support. We're now opening up on this new 4-hour bar, which opened up less than a half hour ago, up and into the body of the prior bar. That's a sign that we may have seen a bottom on Bitcoin, and we may begin to continue to press higher here. Now, if we break down below this lower band of support, well, obviously all bets are off. We're going considerably lower. Before we go to the stock market futures, let's take a look at the bond market. So the 10-year Treasury note is pressing lower. that means that yields are pressing higher. And we are seeing, or we were seeing, higher lows. We have now broken down on 4-hour RSI. So it looks as though, yeah, we are breaking down here on the 10-year Treasury note significantly. I mean, this is a bullish reversal bar yesterday, and it has now failed to hold. That's bearish stuff. So expect yields to continue higher today, and that could pose a threat to the market. Remember, this market is very expensive. Let's take a look at the S&P futures. They're up this morning. They're off the highs of the session. They're very overbought relative to the third standard deviation Bollinger Band on a 4-hour bar. Let's check out RSI. Still looking good. Higher lows, higher highs. Members, we'll talk about the daily chart in a moment on morning update, so stay tuned, please. Let's take a look at the NASDAQ. This is the NASDAQ 100. Still looking good here. We're up this morning. Higher lows, higher highs on RSI. So again, we're going to take a look at the daily chart on morning update with members. And in fact, folks, we're going to segue into morning update right now. But if you're not currently a member, sign up for the 14-day free trial offer. Not ready yet? That's fine. Smash that like button. Subscribe to my YouTube channel. Enter your email address. We hate spam too. Get best stock charts tomorrow, Saturday. And that's where I review the stocks that we're watching for the coming week. Members, let's get over to morning update. Okay, members, let's kick things off with a look at the weekly chart of the 10-year Treasury yield. At current, we are 1 bip off the high of the week as of yesterday's close. Now, we're up on yields this morning. Therefore, we appear poised to close out the week at the highs of the week. And that sets the stage for higher highs for next week. Now, why does this matter? It matters because once we begin to see a 3 handle on yields, the question then becomes, at what point in time will the markets begin to come under pressure? This is a very strong chart. Beautiful W formation on SOXS. MACD poised to go positive. So bonds are falling. The U.S. dollar is falling. In fact, let's take a look at the dollar.